I want to learn a lot about how you did the 0 to 1 for Skydo, right? Because that's when I spent a lot of time as a venture investor with founders in that stage, and it's typically, I mean, the most challenging stage, right? The classic cold start problem. Movin, I think starting with you, right? The whole concept of an MVP. And I think it becomes very, very interesting, especially in the context of a payments product, and that too a cross-border payments product, right? And I know, I mean, you've been a product leader as well in so many other really marquee Indian consumer tech companies. Uh, what has been your philosophy in terms of how do you build that first V1? What are some of the frameworks, philosophies, thinkings, approaches that founders should think about?
I'll try to start with a painful but very useful incident that happened a few years ago, from which I learned a lot about this. In my previous startup, which I started in 2015 along with another friend, um, in the social media space, for the first year and a half, we were working on our first idea. And about 6 months in, when we launched our app across iOS, Android, web, it was a photo app. Some of my friends really praised the design and the UX, but after a couple of days, stopped using the app. And when I asked them, the reason was they already had a few other photo apps on their phone, and they just didn't feel the need to have one more. And they also couldn't understand why they should use, our app that was called Gallery 5. So I actually had a very harsh but very profound realization at that point. It might sound very obvious nowadays because there's enough, YouTube videos and literature about building an MVP and about product market fit and so on. Maybe it was there at that time also, and I was the one who didn't heed it. But I think I realized that before you build anything, before you write even a single line of code, or do any kind of work from a business development perspective, or any kind of serious execution work on a startup, you have to know who the customer is going to be, and you have to know what their problem is, and you have to know what broadly your solution might look like and why it will be better, right? So in Gallery 5's case, we hadn't done this thinking. We thought of a cool app and just went ahead and built it. Being techies, got enthused by the idea of building a cool photo app, and maybe this could be the next big thing after Instagram and Pinterest and whatnot. So with that thinking, we just built it. It's not impossible to build a great business that way, but I would say the odds are, 1,000 times less than the typical way of building a business, which is identify a customer, identify a problem, and then identify a solution. So because I had been through this debacle and learned a lot from it, and by the way, I wouldn't go back and change anything because I learned so much in those 1.5 years that it has been really helpful post that. But this time when I was building a company, because I was scarred from that last time, I knew that this time I just cannot make the same mistake. Going in, I have to know who the customer is, who the what the problem is, and what our solution will be. Of course, there are several risks in building a business, particularly before product market fit, and your hypothesis could turn out wrong. Despite all your thinking, customers may not be receptive to your product, and so on. But I thought I cannot go in without all of this. So Srivatsan and I, when we were brainstorming about cross-border payments, our thesis was the kind of business that Srivatsan used to run as his family business. That's the kind of business that will be our target customer. There are lots of small and medium businesses in India who are exporting and are bootstrapped, profitable. Some of them are second or third generation businesses. They're typically based in tier 2 or tier 3 cities, and making enough money for the country, and yet getting a really poor experience from banks, and also going through tons of compliance burden, post-payment taxation pain, and so on. So our thesis was, this is the target customer, and we will build something that is completely digital and transparent, convenient for them. And we will charge them for the services we provide. We will charge per transaction or some sort of a subscription fee. And so this is what we set out to build. Now, I think the third wave of COVID was going on when we were, just getting out of our jobs and setting up the venture, incorporating the company, starting to look for the first few hires, starting to fundraise, and so on. So we could not really travel at that point to meet customers. We spoke to some of them on phone, but couldn't really get very deep. As the third wave started going away and we were able to travel, we went to places like Tirupur and Panipat and met some of these exporters that we were looking to serve. Each of them seemed to be pretty happy, or at least in a decent equilibrium with their bank in terms of the services and the convenience being provided. And it seemed like they are not jumping at the idea of something digital like this, coming their way and them being able to use it from their laptop. By the way, every one of them has a laptop. Every one of them uses email, Zoom calls, and so on to communicate with their clients. But it just didn't excite them that payments could be done digitally. They had a very deep relationship with the bank relationship manager and the branch next door. And a lot of physical paper exchange and so on was the way things were done. And it didn't seem like they were desperate to change this or they were really bothered by it. So that is when we, for the first time, realized that our thesis may not actually work out. And for the next few months, we started going back to the drawing board and started thinking about what else could we do then within cross-border payments. Luckily, we stuck to our overall space. And I think that was also the advantage of picking something that is so large in terms of opportunity size, that if you stumble a little bit, you can still come across something meaningful and large, maybe slightly adjacent, but within the same overall space. So in a few months, we learned about services exporters and the pains that they face and the fact that they are actually much more ready to adopt a digital solution. So yeah, that's what we built. So this was I would say, the first few months of our journey in terms of building our MVP and finding product market fit. I think once we discovered this, it was pretty much smooth sailing till we then built our first product, started getting customer love, and so on. I think the other thing that we did well, which again, I think came from a lot of our past experiences, is we did not write a single line of code till we got our first few loyal customers. And the way we did that is ultimately the job to be done is money movement. We need to get people their money from their customers in the US, UK, Europe, and so on. So why can't we do that over WhatsApp? Why can't we do that over email? That was the question we asked ourselves. And I remember doing KYC over phone calls and over video calls manually. And then onboarding those initial few customers who mostly happened to be our friends or well-wishers. And then, getting them their payments without any lines of code. And we had a tech team, so we could have written code. We could have actually built an amazing interface at that point, but we chose not to. And we actually asked the tech team to join us in this kind of pre-PMF sales motion, where we were just serving everybody manually. So I think that was a really amazing decision that we took, and it helped us in understanding what exactly the customer wanted, and at various steps in the journey, from the time they onboard with us to the time they do their first transaction to the time they get their money, to their post-payment compliance, etc. What are their requirements? And then the day we sat down to write the first line of code, we pretty much had a really clear PRD. So I think that really helped. And of course, our first few customers are also to thank for this, because they stuck with us despite not having a great interface, etc. I would say we were much more manual than a bank is on that day, right? But they still stuck with us because the promise was that we will ultimately make it digital, and we did do that in a few months after.
I think the only thing I want to add is it's very tempting at every point to kind of spread yourselves sideways. Despite all the wisdom that is there out in the world, when you actually do some things, you forget learned wisdom of other people. So not saying that everything went perfectly, but I would say the first few months, I think we stayed remarkably focused and narrow. Saying that, okay, this is my customer, this is the specific type of payment that we can today serve. We can't do something even slightly adjacent. It's okay if we say sorry, we can't help you, than actually getting tempted and chasing multiple different even seemingly adjacent opportunities. That I think has been helpful, and you can always what I'm realizing is you can always move sideways a little later once you have a little more capability. One of my past managers used to always use this phrase, focus before fragment, right? I never used to understand it back then. I always used to be very fragmented as an employee, because I wanted to do multiple things, be excited, get inspired all the time. And I think typically any smart kid coming out of college in their first few years or even up to a decade of work experience will probably want that there is something new every few months to do. So I never used to understand what focus before fragment meant, but now the last couple of years, I actually feel like that's what we did. We focused a lot, and now over the last 6 months, we have constantly been amazed at how many things, how many threads we can actually start pursuing. And I'm sure a couple of years down the line, we can probably do 10x of what we're doing.